Ladies and gentlemen, good day and welcome to the Bikaji Foods International Limited post-earnings conference call hosted by Essential Technologies Private Limited. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. Please note that this conference is being recorded. From the management, we have with us today Mr. Deepak Agarwal, Managing Director, Mr. Rishabh Jain, CEO, and Mr. Manoj Verma, COO. Now I request the management to take us through the key opening remarks, and after that, we can open the floor for the Q&A session. Thank you, and over to you, sir.
Yeah. Thank you very much for joining this Bikaji Foods earning call. I am Rishabh Jain, CFO of Bikaji Foods. I'll take you through a presentation. Me and Manoj will take you through a presentation of Bikaji Foods, and then we can take a question Q&A.
Good morning, everyone.
So my slide is visible to all?
Yeah.
Yeah, perfect. So Bikaji Foods has delivered a strong quarter performance with close to 32.8% gross margin and 13.6% EBITDA growth. So your company has delivered a close to 15% value growth and 15.2% volume growth. So volume growth has been very strong, and we've seen a strong volume growth in this quarter. The price this quarter is largely volume driven growth. Price growth was negligible rather than negative compared to volume growth. We delivered a strong EBITDA of close to 13.6%, and the gross margin was close to 32.8%. Over to you, Manoj.
Hello. Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah. So taking through the quick, quarter one salient points. So on market leadership, if we talk about, so we have delivered a 14.7% growth from our core states, and core states are very, very high contributing state for us. That's the kind of delivery and the growth what we have delivered there. Relaunch of our snacks category with toys consumer offer insights. So that's another new thing what we did. Now talking about our family pack contribution and momentum. So if we look at our current share of business from family pack has moved up to 55.6%, which is a 200 basis point increase YOY over last year. On the distribution and capacity building, we are now present over 9.5 lakh outlets across the country. In last quarter, we have added 13,000 outlets direct under our direct reach. Our export continues to go strong and high delivery growth in the quarter one, presence across 25 countries around the globe. Manufacturing capacity in this quarter, we have added by 9,000 metric ton per annum. That's the capacity increase. In this quarter, we have brought in our fold. Feet on ground, we have added 150 people on ground. This is on company's payroll and also third party put together. So that's the way we are going strong on our coverage. Continue to have a strong product portfolio, which is over 300 products, and focus on distribution. And what essentially it means is that the task on projects underway to open a lot of CFAs across the country to bring this distribution close, and also try to reduce dependence on our super stockist model. Yeah. So talking about our product categories, I mean, I think all of us are aware of, but still, so bhujia, namkeen, packaged sweets, papad, western snacks, and others, yeah, and other snacks. Talking about pan-India distribution, so as I said that we are now available at over 950,000 plus outlets. March 22 exit, we were covering direct coverage on our SFA, so with lat long. availability and KYC of each outlet was about 72,000 outlet, which by March 23 we brought this number to close to 150,000 outlets, and in quarter one, as I said, have added 13,000 outlets, in our direct coverage. This has come on the back of adding 150 sales team, frontline sales guys on ground. On our marketing initiatives, as we say, so we continue to invest behind marketing and different vehicles of communication. So in this quarter, what we did was that we had association co-branding with a movie released called Satya Prem Ki Katha. Uh, Besides this, we did digital campaigns. This was bringing the emotional and sentimental value of mothers. So on some Mother's Day, other events what we kept on doing on like World Food Safety Day, that's where our presence was there. And besides this, we also participated in international exhibition, which happened, so one very recently which has happened in USA. On digital media, if you look at, so we're looking at it as two part. One is social media, so which is about branding. Second is the digital campaign, which is more focusing and helping our e-com and q-com channel grow and do better. If we look at the number of followers on Instagram and Facebook have grown leaps and bounds. So in 22-23 we witnessed a growth of 90%. Engagement rate was 3.2%. That's what we witnessed in these platforms, social media platforms. On the business performance, we have delivered a 15.2% volume growth and a revenue growth of 15%. This is after many, many quarters wherein volume and value growth are more or less in line with each other. Ethnic snacks, which has the highest share of business to our entire business, has delivered a 16.1% growth. Packaged sweets at 10.5% YOY growth. Western snacks is ahead of all at 19.3% growth, and papad, though a small category, has delivered a 1.1% growth. If we look at the shift in product mix, quarter one this year versus quarter one last year, so broadly it's the same. There's a slight movement wherein the ethnic snacks from 74.3% contribution has moved up to 74.7. I think the point which I would want to highlight here is that Western snacks, where our investment has gone, the growths are high. There, if you look at, the contribution has moved up from 8.7 to 8.9. So this is on a continuous. This is moving upwards over last 6 quarters. If we look at, rest is broadly in the same line. Exports as yeah. So uh, the way we look at our market, we have fragmented it into 4 parts. So one is core, where the key business 3 states are Rajasthan, Assam, Bihar, focus states and other states. So here, if you look at performance by each subset, core has delivered a growth of 14.7%. Focus states delivered a growth of 16.3%, and other states has delivered a growth of 16.5%. Exports at 29.4% growth YOY over last year. So the contribution from the core states is about 74.3%, followed by focus states, which is 15.2%, followed by other states, which is 6.9%, and the exports is at 3.6%. If we look at the business and business growth by east, northeast, west, south basis, so east has grown by 13.1%, north 15.8%, south has grown at 60.9%, and the west is at 6.2% growth. So east, which is relatively a high contribution market for us, in this quarter was badly impacted with the floods, which all of you would have read and heard about. So these the Bihar part and the northeast states, which got severely impacted. So that perhaps has resulted in that stuff. and rest north has done well, south has done extremely well, although it's a small business. But yes, no, we are making inroads into these markets. Here is about mix of SKUs. So if we look at the center block, which is family packs has grown at 19.6%, impulse pack at 10.5%, and the rest of the SKUs at 21%. That's the kind of mix. And the family pack contribution from 53.7 has moved up to 55.6% in this quarter. That's the movement quarter on quarter, and has also helped us deliver better EBITDA. So this is also one of the factors. Yeah, Rishabh, over to you.
Yeah. So we have built a strong capacity in last 1.5 2 years, and this in first quarter also our Patna unit, Patna CMU has started. Of course, trial production is going on in multiple lines, but yeah, so over 9,000 ton of capacity addition has been done in first quarter. Also, two plant, one in Raipur, Chhattisgarh will add in by end of this year, and other frozen plant will come in next 4 months. So that's a two plant which will come up by end of FY24. We'll build a sufficient capacity which can deliver next 3.5 4 years performance. We take care of all the capacity addition. So currently we are using capacity of close to 40-41% at a blended level, because we added more of the capacity in last 1 year, and the plant which has been newly added, so we are utilizing it at a lower level because it takes time to utilize at 40-50%. So largely we have built a capacity ahead of time, and it will take care of next 3-4 years capacity. From revenue perspective, so done a revenue of close to 482 crore rupees, which is 15% growth over last year quarter one, and close to 4.3% swing over quarter four of last year. From EBITDA perspective, we done EBITDA of close to 65.8 crore rupees, which is close to 113% growth over last year, and close 6.4% growth over quarter four. So this EBITDA basically is led by multiple factors, be it superior mix, or led by operational efficiency. Likewise, we have efficiently managed many things at manufacturing costs and other HR costs, that is saved close to 0.6 to 0.8% from EBITDA perspective. Despite a gross margin has reduced if you look compared to quarter four, but overall at EBITDA level we have our EBITDA has increased compared to quarter four. So we did multiple things at EBITDA level, below gross margin also, that has improved our gross EBITDA. These are key raw materials, edible oil. So edible oil is supported in first quarter, but their persistent flows have the prices increase in first quarter. So 6 to 8% price increase has been done in price of raw material has increased in first quarter. Laminates, corrugated blocks is largely in line same compared to last quarter, but yeah, it's in declining trend. These are the consolidated financials which we discussed earlier. So that's the part from presentation perspective. So we can discuss on Q&A and take a question of all the investors.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the raise hand icon available on the toolbar, or you may click on Q&A icon to raise hand. The operator will announce your name when it is your turn to ask a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Percy Pantaki from IIFL. Please go ahead.
Hi everyone, congrats on a good set of numbers.
As we are not
Am I
able to hear
audible?
you well.
Hello, can you hear me?
Firstly, your voice is little less audible. So can you speak it louder, or I think?
Yeah, can you speak louder, please?
Am I audible now?
Yeah,
Yes, better.
perfect.
Okay. Yeah. So my first question is, see, you've done very well on margins. In fact, the margin expansion has happened much sooner than expected. We were basically taking a gradual margin expansion across the quarters. You already reached 13.5%. What I wanted to ask you is that for the next year, FY25, How much basis points expansion are you targeting over FY24 full year? Assuming that FY24, I mean, you have done 13 and a half, but even if we conservatively take that, let's say it will stabilize at around 13%. Do you think that there is further margin expansion possibility in FY25, or you would like to maintain this 13% and reinvest for growth?
So largely, see, Percy, thanks for the question, and it's a very valid question. So largely, see, this year you will see our major ad spend. Ad spend comes in second and third quarter. So largely, what we look at over the year basis, we our overall over the year, our EBITDA, what we're targeting is between 12.5 to 13%. That's what target we're taking this year. And of course, PLI income will add in the other than this what we, or this operational EBITDA will come. Point number two, of course, see, once we are utilizing very low capacity as of now. So once we utilize this capacity, of course, there operational efficiency which will build in. So we are targeting at least 0.5 base in margin expansion at least in next 2 years, year on year.
So Mr. Percy's line is disconnected. We'll move on to the next question from the line of Ashwini Agarwala from Edelweiss Mutual Fund. Please go ahead.
Uh, Good morning, sir. Well, congrats for good set of results. The margins have been
Thank
like
you,
much
Ashwin.
better than expected, Rishabh. Uh, so just wanted to know what was your ad spend for this quarter, if you can disclose it.
So our ad spend for this quarter is close to 1%.
Okay, and in the third quarter we will have the World Cup, and in the second quarter onwards, do we see a substantial
So
increase in the? Yeah.
So normally, Ashwini, so our ad spend, what we targeted and budgeted in our PNL is close to 2% at a year-old blended level. And we normally add most of the ad in during Diwali and festive season. From Rakhi to Diwali, there are major ad spend which is going on. So at a yearly level, we are targeting 2% of ad spend.
Okay, and we were planning. We had taken over a small chain of restaurants in Jaipur. So can you throw some light on that?
So it's too early because our frozen plant will come up in next 3 to 6 months. And from QSR perspective, we will build some trials and trials of initially, and then so it's largely 1.5 2 years journey before finalizing anything on expansion plan. So in next 6 to 8 months we are building strong frozen plant, and that can be a that can serve as a base kitchen for QSR, as well as of course frozen for our export business. But yeah, it's too early to comment on frozen QSR business because first we'll finalize on all quality, technology, and all key parameters, and then we'll focus on QSR, building QSR business.
Okay. And in the last quarter, we had received a PLI of roughly 25 crores, which we had not accounted for. So have we
Right.
accounted for that in this? Have we accounted for
No, no,
that in
no.
this quarter?
No, Ashwini. So largely, we have received 20 crore, close to 20 crore rupees in last in March 2023, and so we'll account. So there are two conditions basically. One is sales condition, which we need to grow at a minimum 10% growth over FY21 base, and other one is PLI investment commitment. So we have done commitment of close to 438 crore rupees, and the balance layover has been close to 90 crore rupees, which we need to complete in FY23-24, including all the CMU's investment. So we are on target and will complete this investment in this this financial year FY23-24. And once we complete this,
Okay.
we'll sorry.
Yes. Yeah. Please go ahead, sir.
So yeah. So we'll complete this capex cycle in this financial year, and we'll take 20 crore rupees plus also this 20 is we receive for FY22. For FY23 also, we will file all the papers in this August month, and that's close to 30 crore rupees subsidy which we'll receive in this calendar year. That's what we are planning. We are gunning for with the government. And government is very aggressive in giving PLI scheme to all the contenders. So this year largely close to FY22 and 23. These two income will be recorded so in last quarter.
Okay. And do we plan to launch new products? If we look at your nearest competitor or the market leader, they've got a whole range of new products. So are you people planning to launch any new products during the next 2 months or during the next 2 quarters, I mean to say?
So this new product addition is a normal phase. So largely you will see in our last presentation also we launched about 3 or 4 5 new products and they're doing well like paneer bhujia in chivda category, in moody category. So that's a normal business and we normally add close to 1 or 2 products every quarter. And that's a normal business because normally sometimes we add in our competitor look and they add in their portfolio or sometimes we copy them. So that's a normal thing we do.
Okay, sir. Thanks a lot.
Thank you.
Thank you. We have our next question from Gaurav Jogani from Axis Capital. Please go ahead.
Thank you. Hello, sir. Am I audible?
Yeah,
Yes,
Gaurav,
Yeah.
please
please
go
go
on.
ahead.
Yeah. So my question, with regards to the growth in the core markets that has been quite robust, around 15% odd. However, if we look at the focus markets, the growth is again in that 16-17% mark. So given the low base for the focus markets and also the capacity is now ramping up with these locations, are we targeting a higher growth rates in these segments going ahead?
So going forward, you will see that focus markets will be growing much faster than the core markets for sure.
And so this will be led by again these capacity ramping up, the ones that you have opened very recently.
So both, see, capacity is basically is the availability of product. More important is that how do we increase sales in that, how do we, grow ourselves or enable ourselves to suck for whatever we produce. So those work, that work is on, and they will both will complement each other. So जो हमने production capacity वहाँ पे बढ़ाई है और वहाँ पे हमारी sales growth, distribution growth will get us in the disproportionate growth.
Okay, sure, sir. And sir, my next question, is with regards to again the distribution expansion that you talked about, especially on the direct front. So one thing that you mentioned, of the CFA, now putting up more CFAs and converting the super stockists. So if you can dwell more on this, what are we exactly doing on this front, and how are we
No,
going about this?
Yeah, so currently if you look at now ये हमारे business या route to market में CFA were not existing as such, right? Which is, if you see in most of the FMCG or I think all companies, that's one thing which is prevalent. So what तो इसलिए हमारा डिपेंडेंस सुपर स्टॉकिस्ट पे ज्यादा था तो फ्रॉम फैक्ट्री स्टॉक गोज टू सुपर स्टॉकिस्ट विच इज अ क्वाजाई सीएफए काइंड ऑफ अ स्टफ एंड इन टर्न वो उसके नीचे डिस्ट्रीब्यूटर्स होते थे और सब डिस्ट्रीब्यूटर वो सर्विस करते थे what we are trying creating is that we are creating CFA agents जहां पे हमारा स्टॉक जो पहुंचेगा और वहां से उसके बाद सुपर स्टॉकिस्ट के थ्रू ना होके डायरेक्ट भी वहां पे जाएगा तो बोथ इज वन इज एफिशिएंसी बढ़ेगी दूसरा हमारी कॉस्ट जो अभी हम सुपर स्टॉकिस्ट पे खर्च करते हैं वी विल बी एबल टू सेव सम नो परसेंटेज फ्रॉम देयर इटसेल्फ तो इट इज नॉट अ रिप्लेसमेंट ऑफ सुपर स्टॉकिस्ट it is a reducing dependence on the super stockist.
Sure. And sir, if you can quantify anything, I mean, how much savings this possibly could lead to, and what could be the timelines for this?
I think, see, this is not from the savings perspective. That would be a byproduct of if we do this stuff. What we want to do is that how's that we, increase efficiencies, increase fill rate to the end distributor and then in the retail market. In turn, if you look at, I mean, what we presume is that this should get us about say 0.5 to 1% savings, net saving, in this stuff.
Sure, sure. And sir, my last question would be, in terms of the margins, and this would be more to Rishabh. So, because you mentioned that your margins that you're targeting ex-PLI is 12.5 to 13%. Now, if we look at the margins for the first quarter itself, it's 13.7% odd that we have done. So are we expecting some corrections in the months going ahead in the margins? And if yes, what would be this, why would this margin correction would happen?
Yeah, Gaurav. So basically, there are two things. One basically you see the ad cost. Ad cost in first quarter was close to 1.2%, which will go, which will be large on a yearly basis. We have planned at close to 2%. So this will be on margin part. Point number one. Point number two, we have also in July month we have in July and August month we have planned a promo offer for consumer basically. That's to pass on to consumer. Like 10% extra on promo pack, and that's the thing we have planned on, and we have implemented in August month. So largely we are planning close to 12.5 to 13%, despite passing on to the consumer or ad costs. So that's a budget we are taking on.
So this the extra promo of 10% from August month, how much of an pricing impact net basis it will have on the overall? I mean,
So
because
we
this
have
will be
planned
more.
in we have planned in 4 5 products, 4 5 not on all, but yeah, this will have impact
Okay.
of close to 1% on margin.
No, 1% margin and how much kind of a price realization impact this will have? Basically, I'm assuming that
So
the
price
realization is going to be.
realization close. So largely, if you see at an overall level, it's close to 1.5%. But because this in 5 6 product, not on all category. So at an overall level, it's 1.5%.
Okay, okay. Thank you, and that's all from me.
Thank you. We have our next question from Abneesh Roy from Nuvama. Please go ahead. Mr. Abneesh Roy, please turn on your microphone and go ahead with your question. Since there is no response, I'll move on to the next question from Tejas Shah from Avendus Spark. Please go ahead.
Hello, am I audible?
Ye- Yes, you are.
Yeah, thank you. Hi, so thanks for the opportunity and thanks for a very detailed presentation also. A couple of questions from my side. First, on core market growth, it's very robust number there on a good base. So just wanted to understand what is the nature of this growth. Is it that the underlying markets are doing that well, or we are gaining a lot of market share from regional competitors or national competitors in those markets?
So Tejas, in core states, if we talk about, we have gained shares across these three states, in this quarter, and even in last year, if we look at the major gains, when we look at are coming from the regional and local players. So that's where the primary, share shift which we have witnessed in these markets.
And so this largely happens on premise of what is it that customer prefers us over others
So
because of
yeah,
better
so
pricing or yeah.
right. So it's two-pronged thing. So one, of course, our brand is pretty established brand. The second is that the way we are trying to intensify or increase our coverage, penetration, quality of service, SFA handled stuff. So basically efficiencies, in looking at, throughput per storehouse that we increase in that stuff. I think that's the second factor that which is helping us deliver better in these states.
And second question is that when we enter a new market, let's say the focus market, is it right to understand that your entry SKUs or entry products will be largely through your strength, which is ethnic snacks, and then gradually you will introduce the other ones, or it is actually based on market study, you can actually kind of you can prepone Western snacks launch there versus ethnic snacks. How does the cycle works?
So Tejas, I think you've given both the point. It's mix of both. That's what it works. See, our brand is not a new brand. We're not a new company. We've been there for decades. So the gap, what we figure out was that our presence, the regular service in the market, that was missing. So if we look at our rasgulla, gulab jamun, son papdi, I mean papad, these are pretty reasonably okay brands or categories in these markets as well. So the way we go is one, of course, we ride on the categories what is doing well or what have been doing well, and second is the latter part of your question, that Western snacks, because when we open our start our manufacturing units and that stuff, so Western snacks, which earlier we never tried to focus or we couldn't do before, is what we leverage on the new categories as well. That's what is the strategy what we do. And last but not the least is basically the insights and study of that local geography, that what is doing well, which subcategory is most salient in that particular geography. We try to upweight our efforts on those categories.
Yeah, that's very detailed. And then last one, if I may, what will be the number of SKUs that we are running today, and what was that number last year?
So number of SQC, it's about there's not much of a change, because what happens is that as we add SQ, we keep cutting the tail. That's the way it moves on, because it is about consumer preference. It's about market demand keep coming, and we keep weeding off kind of a stuff. So the growth is not on the basis of that there's a phenomenal SQ increase over that period. If you want specific number, Rishabh, if you can just give the number or separately answer this thing.
Yeah, I'll take it offline. No worries, sir. Thanks and all the best.
Thank you. A reminder to participants to ask a question. Please click on the raise hand icon available on the toolbar, or you may click on Q&A icon to raise hand. We'll take the next question from Ravi Srivastava from Bay Capital. Please go ahead. Mr. Ravi Srivastava,
Hello.
I have unmuted your line. Yes, please
Yeah,
go
can you
ahead.
hear me? Yeah. First of all, congratulations on a great set of number, Manoj and Rishabh. Uh, can you guys hear me? Sorry.
Yeah, you
Yeah,
are
yes,
audible.
yes.
Yeah.
Please go on,
Yeah.
Ravi.
I have a couple of questions. One is on, taking forward from Tejas's question on just throughputs and, market expansion. Just wanted to understand from you, Manoj, as to, you guys had implemented a DMS system, plus, now you're going into new markets. If you can just talk to us about, throughput levels in core markets, how has that improved as you have sort of come in and implemented DMS? And second, on the new markets, which are the markets where you're adding these 150 people that have been added in the sales?
Yeah. So to your first question, if you look at now, so there's not much of direct coverage increase in these core markets. Here, the efficiencies have gone up, and if you look at the growth of 15, close to 15%, so that's a very back of envelope. If you look at is the kind of throughput increase which has happened from these stores in the core market. Uh, to your second question, where we have added in UP, our one of the focus state. We have added it in Rajasthan and in southern states. So that's where the key addition has gone. If we look at in this quarter, we have added about 150 people.
Yeah.
In next 2 quarters, you will see the investment behind adding these feet on the ground, and we would be adding about 150 to 200 more feet on the ground in next 2 quarters. That's the plan.
Understood. The second question is on the recent acquisition that you guys have done. It's a very small one, but just wanted to understand the thought process behind that. Why that acquisition? What are you guys looking into it, and how big can that opportunity be?
So that's too small a acquisition, but yes, if you look at the strategic thought behind this acquisition, is to have a second brand, right? So if we have to play in any of the geography, right? So instead, and a mass brand, so that's where we can leverage this brand instead of Bikaji bringing it down or doing that kind of a stuff. So if you look at most of the FMCG companies, across categories, that's the strategy which we have tried to adopt and try for ourselves.
So it is like a flanker brand for you. Is
Exactly.
that how one should think
You have,
about it?
you have said it. Yeah.
Understood. Last point, Manoj, just if on the core market, you mentioned that, largely the growth has been through throughputs. Can you just make that real for us? Say a city like Jodhpur, say a city like Jaisalmer. If you can just talk to us about, what was the throughput in some stores and what is the opportunity that you see there? Because I don't know how big the opportunity of throughput expansion itself is. So if you can
So
just
see,
make it real
yeah.
with some
So there,
example.
yeah. So see, it's a progression, right? So there were stores, who were earlier 1,000 rupee throughput stores. So let's say C and D class outlets has moved up to 1,200, 1,300 kind of stuff, kind of thing. The top end stores, where the growth has come from selling more categories. So let's say Namkeen has a lot of subcategories below it. We've identified focus categories or brands for ourselves. That's where we are trying to do that stuff. Some average, on an average, if you look at, is about for a state like Rajasthan, or no, you're talking Jodhpur. So
Yeah.
average throughput per store would be around 3,500 per store, which has moved up. Earlier, it used to be about 3,100 kind of a stuff. That's what. But this would vary from city to city.
Understood. Last point, and sorry, I'm taking a bit more time.
No, no.
Last, uh, the sorry, the last question was largely on the mix change, right? So there is a increase this quarter in terms of the family packs has sort of gone up. How much of the gross margin expansion is one, because I clear that it is because of one family pack growth, and second one is the RM decline. But if you can just quantify what has driven more and what is more sustainable in terms of just gross margins for us.
Yeah,
Rishabh,
so
will you take this?
basically, yeah. So from gross margin perspective, so largely, of course, family pack is higher in gross margin compared to impulse pack, and but there is not significant gap in between both of them, like close to 2.5-3% gap is there between impulse and family pack because we charge the higher price of packaging material on impulse pack also. So, but at two
Okay.
and a half to 3% margin at EBITDA level is gap is there. So, but it's a mix of both actually. Because the raw material prices favor like it's not compare if you compare with last year quarter 1, of course raw material prices favored much, but if you compare to last quarter of quarter
Yeah.
4 of last year, so it's largely we have seen same price because edible oil has supported and agri has largely the prices increased, so largely it was mix of same. There was no major variation in at a overall cost level. Of course we have passed on the price to consumer, that has came into increase in our cost of goods sold of close to 1.25% in this
Yeah.
quarter compared to last quarter.
But Rishabh, should we think that this 33% level is more sustainable now? Because historically you guys were at
Yeah.
29% level. Now it's
So
33, right?
27%, 27% was of course, but yeah, if you see our past trend of 5-6 years, we always were at 20 to 30%, 29%. So of course we want to be at 30 plus 31, 32%, 31, 32%. That's the level we want to be at, and that's what we are getting for. Even after passing on the consumer price, which we done consumer offer, which we done in August month, July month itself. So we are targeting that we should be at the same level at the when we will see at a yearly blended level.
Got it. Thank you so much. Thank you so much for answering so many questions. Thank you.
Thanks.
Thank you. We have a next question from Saurabh Jain from HDFC Life Insurance. Please go ahead.
Yeah, am I audible?
Yes.
Yeah,
Yeah,
please.
Saurabh.
Yeah. So I had a couple of questions. So first question is on the product mix. So if I look at the FY23 numbers, about 70% was coming from the ethnic snacks. So given that you're putting up more capacity in the Western snacks and some of them in sweets also, and then frozen snacks, what is the mix that we can see in the next, let's say, 2-3 years? The mix changing will there be a significant shift in the product mix?
So there will certainly be a mix change, Saurabh. So in next couple of years, you can see this Western snacks moving up to say about 11% kind of a contribution, 10 to 11%.
Okay, okay. And
Also,
just to understand,
Saurabh, one
yeah,
thing, Saurabh. So basically, you will see it. So this quarterly trend.
hello,
Hello, sir. You're not audible now. Mr. Saurabh Jain, you are there, right?
yeah, I'm there.
Okay. Please stay connected. We've lost the management connections. I request you all to stay connected while they rejoin. Thank you.
Hello, am I audible?
Yeah, Rishabh, you are audible.
Yes.
Yeah, sorry. So my line was
Yeah,
disconnected. So when you see the yearly level, of course, we will be targeting close to 11.5-12% in sweets. So ethnic snacks will be close to 72 and 72%.
okay. So this 11 and a half, 11% you're saying is for like 2-3 years down the line, FY25, is it?
So
Or
sweet
you're
will be around
talking
11
about,
or 12%. Sweet. This will be carrying the same level.
no, sorry, just
And
to
also one
clarify,
thing.
you're saying that 72% will be ethnic snacks, 11% will be sweets, and then on a slightly long-term basis, Western snacks would be about 11%, 10%. That's the understanding. Hello?
Please stay connected, sir. We've lost the connection again. Ladies and gentlemen, please stay connected while the management rejoin. Ladies and gentlemen, please stay connected.
Hello.
Mr. Verma?
Yeah.
Yes, I can hear you now. Please go ahead.
Sorry, I missed the question. I mean, so if there's some issue, so if
Yeah,
you
so
can please.
just to reiterate, so my question was that the product mix change in the next, let's say, 2, 3 years. So what will be the change in the product mix? And then my follow-up question is that because of this product mix change, what is the benefit we'll get on the gross margin side? Hello?
Yeah, Mr. Jain, I'm sorry, but we've lost the connection again. Give me a moment, please.
Hello. It seems to be
Mr. Verma?
some connectivity issue. I'm not able to. Now you're audible. Yeah, please.
Yeah, am I audible now?
It's better now. It's all clear. Yeah.
Yeah, so just to summarize my question, I was saying that what is the product mix change we can expect in the next 2, 3 years, and what will the expansion in the gross margin because of this product mix change in the next 2, 3 years? That was my question.
Okay. So one is that, see, I think the question where you started from was that we're investing behind Western.
Mr. Verma? Mr. Saurabh Jain?
Yeah, I am here.
You're there, right? Mr. Manoj Verma? We are unable to hear you, sir. Ladies and gentlemen, please stay connected while the management rejoin.
Hello, am I audible?
Yes, Mr. Verma, you're connected from your mobile now?
No, I'm still on from this internet only. But
Okay,
I think
we can
it's
hear
much
you.
better. Yeah.
Yes, please go
So
ahead.
sorry for this inconvenience. So the answer to your question is that yes, our Western snacks category will see a major shift in next couple of years, and that's an outcome of kind of investment what we have done behind increasing our manufacturing capacity. So currently, which is is about between 8 and 9, you will see next couple of years would move up to 11 between 11 and 12%. The rest of the categories, if we see that sweets will see some upward movement, papad would more or less stay on the same, and as the rest of the category grows, you will see that ethnic and so ethnic snacks will.
Mr. Manoj Verma, we are unable to hear you again, sir. Ladies and gentlemen, we apologize for this. We request you to stay connected, please.
Hello.
Yeah, Mr. Verma,
So
we
where
can
did
hear you,
this?
sir.
Yeah. So do I need to repeat the entire stuff or?
Mr.
No,
Saurabh Jain?
you can, sir, you can start from where you're saying that you explained about the product mix that the Western
Yeah.
snacks will go to about
So
11%. So
yeah.
then
So
the implication on the gross margin.
yeah, so gross margin, what we will do is we'll try and retain the current what gross margins we are delivering. This would come on the back of the logistics efficiencies which we will bring in. Also, the product mix, what we are working on, we'll keep improving upon this product mix. So we will not let our gross margins go down on cost of increased Western snacks. That's the plans we have for ourselves.
Okay, so for my understanding, Western snacks is a lower gross margin business than ethnic snacks.
Slightly,
Is that
yes, a
this?
couple of percentage
Okay,
point, yes.
okay, okay. Thanks for that. So my second question was on the PLI benefits. I was not able to understand it completely. You said that you received about 20 crores of PLI benefits in March last year, FY23, but
Yeah.
I'm not clearly
So
on the
okay,
same. Yeah, so if you can
okay.
clarify
Let
on
let
that
me.
thing.
So it is like the payouts were starting last year. So financial year 22 onwards, 23 onwards, right? And it's a 6 years payout plan. So first payout of close to 20 crore we received in March 23, right? What we did was we have not built in our PNL. We have kept it aside because there are two conditions for getting this PLI stuff. Am I audible?
Yes, sir, you're audible. Continue, please.
So first is to deliver a 10% growth, which we are much ahead of that stuff.
Okay.
I'm sorry, Mr. Jain, we've lost his connection again. Please stay connected.
Hello.
Yes,
Hello.
sir, we can hear you.
Yeah, so I think my voice dropped. So from where do I repeat it? I mean, if that'll be easy for all.
Yeah, you was explaining the two clauses. One was on the sales growth, and
So
second was, I
so
think, on the
one
investment side.
Yeah. So one is a 10% sales growth, and second is the investment. So sales growth, we are much ahead of what we have to deliver to qualify this. On the investment part, there's a commitment of 430 crores to be invested by FY24, of which the last leg is left. So we are still doing that stuff, and all this should get over by end of this year. Once we complete the investment, we will then be qualifying for that stuff.
Mr. Jain, I'm sorry, but we've lost his connection again. I'll request him to join back using his mobile. Please stay connected. Mr. Verma,
Yeah.
sir, can you join from your mobile network? Because we're
Okay.
getting, your
Okay.
connection is
Yeah.
getting disconnected.
Okay. Okay. So give us a sec.
Sure. Gentlemen, please stay connected while Mr. Manoj Verma rejoins.
Hello. Am I audible now?
Yes, sir.
I think
Yes,
this
sir.
should work. This should work better. Saurabh, my apologies for this poor network.
No issue, sir. No issue.
Hello. Yeah. So again, I'll repeat. So there were two criteria. One is 10% growth basis 2021 numbers, which we are much ahead of that growth. Second is the investment to be made, which is 430 crores. That's what we have committed to be done by FY24, right? So there is a part left, so that investment is on, should get over by end of this year. And once we do this, what in principle we'll take, these earning this PLI incentive as a part of our other profit. So in this year, you will see that we should be booking for what we got in March 23 for last year.
Okay. And what will be the total amount you will get in FY24 if we add the
Mr.
20
Jain,
crores
I'm
of?
sorry. Please hold on. Mr. Manoj Verma's line is disconnected again.
Hello.
Mr. Verma?
Yeah. So now there's no internet issue. It's very strong signal, and
I'll check that, sir.
yeah.
Yes, sir. Just to summarize, I wanted to know that in FY24, including the 20 crores of March 23, what is the benefit you'll get of PLI?
So in 24 we'll get about 30 crores plus.
Okay.
So,
Okay.
so it's a ballooning payout, 261 crores over 6 years. That's how it is. The first installment was 20, then 30, then 35. So this would be on an increasing scale. So this year
So
in
then,
24,
then in
30 crores.
FY24, you'll get 20 plus 30, that is 50 crores in terms of
Exactly.
accounting entry. Okay. Okay.
Exactly.
That's very helpful. Yes, sir. That's it from my side. Thank you.
Thank you. We have a next question from Abneesh Roy from Nuvama. Please go ahead. Mr. Abneesh Roy, I have unmuted your line. Please unmute your microphone and go ahead with your question.
Yeah, am I audible?
Yeah.
Yes, yes,
Yeah.
you're
Hello?
audible. We are audible.
Sir, yeah, thanks. So many tech issues today. So first is on Bihar, we are seeing a lot of companies which are having exposure there because of two back-to-back deficit in rainfall. There is a challenge in terms of demand. So would you be worried because that's a key market for you?
So see, this is a natural calamity, and Bihar is that's a phenomena every year. If you look at, this happens. This time, the magnitude is slightly higher, right? Uh, but in terms of worry, I don't think this should be as a cause of major worry, because this is what state is already worked about. Our growth also, if you look at, was dampered to certain extent, against our plans, but it is again getting back on track. Should not be a long term challenge in that sense.
Sure. Second is in FMCG categories where there is strong gross margin expansion leading to EBITDA margin expansion, say soaps, detergent, coconut hair oil, etc. We have seen companies pass on to customer. Plus, that has led to inventory destocking also. So, could you tell us for other players, regional players, because your margins have expanded 600 bits, 800 bits gross and EBITDA margins. So, could there be this risk going ahead? Because I don't think till now the risk has been there because your sales growth and volume growth are similar. But do you think that risk can come in the coming quarters?
So risk in the sense, Avnish, if you can be a little more specific.
The price cuts because regional players operate in a band of margins, and could this lead to some inventory destocking also if the price cuts start?
Yeah. So, Avnish, if you look at, historically, it has been there and will continue to be there in the categories where we play. There always be, the local and regional players. The USP will be.
Mr. Abneesh Roy, please stay connected. We've lost the connection of Mr. Manoj Verma.
Yes, I am connected.
Yes, please stay connected. Thank you.
So, I'm audible.
Yes, sir, you are.
Hello. Yeah. So,
Yes.
Avnish, largely we have seen like in first this August month also we started some consumer offer. So largely what we are looking at same price and volume growth. Largely volume growth will be higher compared to price growth. That's what it looks like in this year.
Okay, that's all from my side. Thank you.
Thank you. We have a next question from Soham Samanta from Centrum Stock Broking. Please go ahead.
Yeah. Hi, Manoj. Good afternoon. Shirish. Uh, am I audible?
Yes, you are.
Manoj?
Mr. Manoj Verma,
Hello.
you're there, right? Mr. Manoj Verma and Mr. Rishabh Jain?
Yeah, I'm there.
Okay.
Can I go ahead?
Yes, yes, please.
Yeah.
So,
So, good afternoon. Thanks for the opportunity. Just two questions. At this point of time, directionally, most of the raw material has corrected, but we see the pulses and cereals are elevated. So, I just wanted to know, Rishabh, what is the weighted inflation we are facing at this time? And I think somebody asked the question whether we have a plans to drop. So I just wanted to read your mind that this gross margin expansion, I know you have said that A&P spends will go up, but what is the gross margin or EBITDA margin, if you can give us some indication on the band which you will try and manage for full year?
So largely, see, in first quarter we done gross margin of close 32%, 32.8%. So that's what we are targeting at a yearly level. We are targeting close to at the same level at the gross margin level at the yearly level. And from a EBITDA perspective, largely what we are gunning for is close to 12.5, 13% EBITDA at the yearly level.
So that is helpful, Rishabh, but if you can say what is the inflation, which commodity inflation you're facing at this time?
So basically, from commodity perspective, we are looking at all agri commodity, be it peanut, be it moong dal or so urad dal. So largely few commodities which we are using, we are seeing good inflation in this. But yeah, also our packaging material is supporting. So largely we are not looking at a much larger inflation issue in this year.
But the question is counterintuitive. Do you have pressure from the competition to drop the prices?
not really. See, we'll be watching competition very closely, and we will certainly be competitive because our aspiration is also to grow top line ahead of the category growth. But for now, we haven't seen as much, and uh, at least when I talk about the branded players, regional and local players, they keep mushrooming, they keep coming and going, which is what is a year on year or ongoing phenomena. So we haven't observed anything specific thus far.
Sure. That's helpful, Manoj. My second and last question on the acquisition of Bhujia Lalji. I need to understand. I mean, I'm sure you have to pardon me because I've joined a little late and there was a lot of disturbance I could not hear. But if I quickly read your mind, is it because of the brand strength? Is it because of channel? Or is it because of the customer? So what is the rationale behind acquisition of this? And part two for that question, do you have such aspirations to buy such brands going forward?
Yeah. So, Shirish, let me take your first question and on this that why Bhujia Lalji, what is our plan? So, basically, the strategy behind this acquisition is to have a second brand which in turn we can make it fight with regional, local, or be the national stuff as well. A second brand which could be a mass brand as well. So if we have to do some discounting, if we have to do some disruptive stuff, so instead of tweaking Bikaji, we can leverage on this brand. This is what is the strategy which, if you look at any company, even the MNCs, they also have a brand B. This is what is behind Bhujia Lalji. Otherwise, it's a very small brand and would continue to be, as small, vis-a-vis Bikaji where it is. To your second question, that in our mind it is like, it's not a, a, a strategy to or a growth driving strategy. It is basically a defense tool which we will use it wherever we want to do that stuff.
Okay. All right. Thank you and all the best.
Thank
Thank
you.
you. I would now like to hand the conference over to management for closing comments. Over to you, sir.
Yeah. So thank you everyone for coming up and giving us the time. Hope we could answer most of the questions. Just in case if you feel we have missed out, happy to take offline. Thanks once again.
Thank you, ladies and gentlemen.
Uh,
On
going
behalf of
going forward, to the team,
Mr. Verma, ladies and gentlemen, on behalf of Bikaji Foods International Limited, that concludes today's session. Thank you for your participation. You may now exit the meeting.